in the financial statement accordingly. Management response?
Yeah, this was a transit account. It was received in the subsequent year. Basically, the funds were transferred to the sub-treasury towards the end of the year. But by the time it hit the sub-treasury account, it was in the subsequent year. So with that, because this is not a rolling balance, rolling account, you would still see the balance in 2024, 2021, sorry.
So we see the balance in...
Yeah, the balance cannot be cleared in 2021 because it is not a rolling balance. So I was just trying to explain why it was, because the first one was taken care of, it was cleared, but it was the sub-treasury account had a balance of this much, which would still be there because the account is not a rolling balance, so we cannot go and clear it. But then the sub-treasury received the amount in the subsequent year, so you would see in the other leg in 2022.
Audit?
Auditors coming. We have confirmed reversal of receipt amounting to 91,500 captured under the GFS code 322-3117. However, the transfer to sub-treasury amounting to $2,837,848 remain outstanding up to the time of finalizing this management letter.
Accountant General, you have ready for a comment to that?
No, the further comment was what I said.
That the account is not, the account is a rolling account.
Yeah.
And that you could not clear the...
Yeah.
So only one is cleared and the other one that the transfer still is pending.
Yeah.
Audit.
Yes, Honorable Chair, I think the Accountant General should read her management response so that we can also read our auditor's comment. If she has any further comment, she can give that to the committee. My suggestion. Okay, thank you.
Accountant General, you can limit yourself to the first management comment. Then auditors will come and respond to that. Then if you have further comment to that development, you can also give that. Okay? What is your further comment, auditors, on response?
Yes, as at the end of this audit, when we were concluding, there were two items. We were able to confirm the reversal that was made on the first item, that is the 91,500. That was corrected. But the second item, the sub-treasury, was still outstanding at the time of finalizing. So she was trying to give an explanation as to what happened after the close of the audit.
And that is to say, as far as the second issue is concerned, that remains unresolved.
Exactly.
Honorable members, any comment on that? One is clear and resolved, but the second one remains unresolved.
Yeah. Yes, I think since the account is already on the account, the account should confirm whether the issue has been resolved in 2022. So if the issue is resolved in 2022, we can move on.
Yeah, this one is pertaining to 2021. There were earlier issues that you did mention were supposed to be resolved or resolved in 2024. How about this one?
Let me allow
provide for the clarification on this matter. You know, when we implemented ITMIS, we have decided in such a way that we have transit accounts that we use in transferring the funding. So as such, when you use this transfer account, because the budget sensitive within the line ministries, so we use these transfer accounts to remit their funding. It is routed through transfer account. So as such, when cash allocation is issued, then we use this transfer account to carry out the movement, meaning the voucher. So you realize that when you raise a transaction as at the end of the year, you will use the transfer account to move the funding. So usually there could be a spillover because it will take some time before the transaction hits the bank. So as such, when you receive this transaction at the other end, you're using the same account to receive the funding so that it goes in and out. So we've looked at this, and our line of thinking is to kind of use a kind of a rolling account, like a liability, that will allow the funding to roll over to the subsequent year so that the other leg is clear. I'm bringing this clarification because even where you require us as part of the solution for us to solve, it will be a problem. Once it is in this year and it's not rolling by default, we cannot clear the other year. It will have to stand alone. So, but like I said, we are thinking of changing the account code so that it will be an account that will allow us to roll the balance so that it clears in the subsequent year.
So we still maintain the matter remain unresolved. Honorable member?
Thank you, Honorable Chair. Honorable Chair, I think we need a broader understanding of the issues. Maybe I will start with the auditors. Apart from your further comments, what other observations do you have? Are these basically bookkeeping issues, or do they have a wider implication that we need to?
Honorable Foreman, thank you for that question. I think essentially this was a mapping issue, as we indicated in the initial finding on page 24. If you may allow me, we noted that a revenue line item was captured using expenditure code and transfer the sub-treasury was credited to the expenditure code, which resulted to an understatement of the expenditure balance in the financial statement. So they were using wrong account code.
So basically, they need to do that correction, right?
Yes, they need to do the correction. The correction was done for one. The sub-treasury was still outstanding. That is what they need to correct now. The first number plate was correctly mapped, but this transfer to sub-treasury was still outstanding. That was not corrected. That was why we gave that auditor's comment. To say that we have confirmed the reversal of the receipt amounting to 91,500 captured under the correct EFS code. However, the transfer to sub-treasury amounting to 2.8 million remain outstanding. It means that was not corrected.
Why is it difficult to do that correction? Because based on your earlier explanation, you said they are rolling accounts.
No, what I said is that these are not rolling accounts, and also it is the reason why it's difficult to correct. We're using the transfer accounts to facilitate the movement of funding at the level of the treasury for them to implement their budget. So when cash allocation is issued, we are using that as a bypass account to move the funding. So you move it in 1 year, and before it gets to the sub-treasury level, it's like it spill over to the next year, to the subsequent year. So here you're having it as, of course, you're going to have it as a debit, credit, a debit, you know, when you're moving it, when you receive it, you use the bank account and you credit it back into that same account so that it clears. So where the account has not been designed to roll over, you will tend to have this split where you have one in 1 year, the other one in another year. So it's difficult to correct now, because if you move this other one back, meaning that you will have it as outstanding, unreconciled, because you should receive the money or capture it as and when it is received. And the second leg is the receiving point of the transaction.
So how were you able to correct the 91,500?
These errors were different. One had to do with capturing a receipt under an account code that was not the correct one. So basically, you just either you cancel. In fact, I think what we did, we did a journal. You move it from the wrong to the correct one. But this one, even if you do that, you have a problem, because the other end, the applied date should be asked at the time
I
of
would like to
receiving.
stop today. You said you use a journal, but based on your system design, at the end of the year, which is 31st of December, the system closes. It rolls over to the next year. So which means if a transaction happens in 2019, by the 31st of December, the accounts for 2019 are closed. If the error appears in 2020, according to your earlier narration, there is no way that you can go back into the system and do the correction. Even if at all you use a journal, you can only use a journal if the window is there. Once you close the accounts, you can no longer use it.
Yeah, I think it's a timing difference. And I want to say this was not an error. You know, it's it matter the way the system was designed. So here, it's like you paid in December and you receive it in January. So as such, when you are receiving it, you're using the same code to clear the transaction. So as such, you cannot journalize in 2020, the previous year. You can only have it as is. Like I said, he did ask what we intend to do, and our thinking is along the lines of trying to have a code that will allow that transaction that you raise, that bypass account, for the balance to roll over in the subsequent year so that by default it clears itself. But as we speak, it will be difficult to correct. It will start separate.
Yeah. So just two last questions, because our intention is to clear the books. Because you see these figures, they are significant. But in essence, if at all the transactions happened, or the postings were done in the actual years in which the transactions occurred, all of these discrepancies would not appear.
But you must, I also want you to understand that when you carry out a transaction at the level of your cash book, it takes time, you know, for it to go to the bank, for the bank to carry out the transaction. That's the reason why you would have that, you know, kind of divorce between the initial transaction and the subsequent one, because you are obliged to use the applied date as at the date of receipt against this transfer account. So like I said, it's a design problem which we are all aware of, and we are working towards maybe changing the account codes, another concept that will allow it to roll over. But as we speak, correcting it, it's really not feasible.
I'm still interested in the 91,000. Because you know what? Your system design does not permit you. The moment the year ends and the books are closed, your system design does not permit you even to do the slightest correction. If I get it right. Because you do not have a window. Had it been you had a window, what you are saying, these values were in transit. From the cash book, they have not yet hit the respective bank accounts. If at all the system allowed you, let's say the subsequent year to go up to 31st of January or even March, you could have been able to clear all of these problems. Tell us exactly what is happening, because we need to understand.
Maybe we are not on the same page.
Okay, let's understand what's happening.
Good morning. In this particular transaction, the 91,000, like my boss was explaining.
No, wait.
Can we get the system? We need to understand.
No, wait.
Let's
Wait. Can you take the oath? Then you cannot talk. We have to show that you come and do this thing. Yes.
I made to understand, you take the affirmation.
Yeah.
System down to dealing with us and
Yes. 5 seconds.
or administer that
326.
And this one, this,
Yes. Hey.
so,
We have plans and.
We are not talking this.
No,
you will talk, everybody will talk.
I thought it was a given.
No. Yes.
You see, Chair, everybody is saying it's our show. It's our show. So do it together. I, hereby affirm that I'll speak
Thank you, Honorable. So, like I was saying before taking the vote, like my boss was explaining, this particular transaction.
No, I was saying, I just want to direct. Let's concentrate. How is your system designed?
The system is designed in a way that, for example, you know, all of these accounts that we are discussing here, they are all prepared in backlog. So, but the system is designed in such a way that even though the year has elapsed, but as long as that particular year is not audited, completed, you can open the period in that particular year, do the necessary adjustments that you need to do, and then close the period and prepare your accounts and submit for audit.
And you don't have a problem.
Yes.
Why should it be difficult now? No. Why should it be difficult now to correct the 2.8?
No, the 2.8 is a different scenario.
Tell us that
So,
scenario.
in this particular expenditure line, it's an a transit account. So it's like an intercompany transaction from one company to
You see, unfortunately, you are honorable members whose understanding of finance is very, very new,
Yes.
including myself. Tell us what you mean by transit account.
So that's what I'm saying. This particular line is not an expenditure line per se. It is used to move funds from one company to another, like from the accountant general to the sub treasury, and the expenditure will take place at the sub treasury level. So at the point of moving the fund, it is not an expenditure at that particular time. So what happened for this particular transaction? The time the fund was moved from the accountant general to the sub treasury, by the time the money hits the sub treasury accounts, for them to do the bank adjustment to recognize this fund in their accounts, the year has already elapsed. So that one you cannot go back and do the adjustment in 2021. So they have already received, they have already done the bank adjustment in 2022. That's why this particular line is still there pending. But had it been they have done that particular transaction in 2021, this line will be zero. It will not have any amount. Because at the end of the day, it's a debit and credit and they will nil out. So for this particular one, that's the reason why we could not clear it at the end of the year in 2021.
Yeah, my last intervention. If I understand you correctly,
Yeah.
the actual transaction was effected in the subsequent year,
Yes.
even though the transfer to the intermediary account or transit account was done in 2021, but the transaction itself hit in 2022.
Yeah.
Not true.
Yeah.
But here we have an opportunity. The opportunity is still you can go back into 2021, right? Because you said the accounts are open. Even though the year ends, you can go back.
Yeah.
Not true. You can go back and effect your necessary corrections. All the auditors are interested in is documentary evidence of the records you are doing. I'm seeing you nodding your head. Allow me, if I'm wrong, you can correct me. Okay? Just nodding your head. You have journals. You use a journal to correct this one. The 91,500. Not so.
Yeah.
Now, your only problem here is This value was in the transit account as at the end of 2021. It didn't hit the account of the respective department who was incurring the expenses. It hit the account in 2022.
Yes.
So your worry is, even though the expenditure was incurred in 2021, but the transaction is appearing in 2022.
Yes.
Am I right in saying that? So now your problem is how to correct that. Is that the problem, I guess?
Can I come in?
Yes.
Yeah, all we're trying to say, there has to be a distinction between the 91,500.
No, I want to know whether what I said is correct or not.
I'm not really sure, but allow me to say this, and then you'll be able to know whether you're right or wrong.
Okay.
The first item, 91,500, is a revenue line item, which is a receipt. So obviously, there is no problem about that, and that has been done. But this one, it's not revenue, you know. So now we're saying the only problem we have is when the account, you know, in fact, this bypass account, which is the transit account, it's a dummy account in the system. Setup, because the sub-treasuries are outside of the main ministry, i.e. local government. So in order for the budget line to be consumed, this is the concept in which the system was done. So now we're saying that concept is recognizing this the transit accounts as not a rolling, you know, which means whatever you have there will come in the subsequent year so that you can match the transactions and easily it is clear. So the course of action we intend to take, since these are the things that are happening, we're saying we'll need to go back and then brainstorm on how do we adjust this to make it a rolling balance so that it will be captured the two automatically, because this is a system. You cannot just go and do certain things in the interest of clearing it and then you change the dynamics of how it behaves. We will not do that. So now we could have just gone and deleted it. But then that's a bigger problem than this. So the course of action we intend to take is to go and look at this so that we will make it a rolling balance in the subsequent year. The two legs can automatically match. That is the course of action we're saying we will take to clear this balance.
Thank you. Chair, I think I'm done. No, just allow me. You see, Agnes, right? I don't think still you have a problem. Because by your explanation, the sub-treasury account per se transfers from your account to the departments who are incurring. Which means it's not incurring any expenses. It is just a transit. A wants it, B is the one given, B sends it to C, C is the sub-treasury account, and from C it goes to what? A. Which means at the end of the year, if you do all your entries, the sub-treasury account needs to be zero, right? Am I right? It has to be zero. Okay? So now your issue is, the transfer that was done in that account in 2021 did not hit the banks as in 2021, but it hit in 2022. In 2022, you are not seeing the balance so that you can clear it. But the auditors must have picked it from somewhere. Am I right? The auditors must have picked it from somewhere. So that's why I still want to insist. If you use your journals, you see you are talking about the 91,500. The 91,500 was a revenue which was credited to an expenditure line. It was a revenue credited to an expenditure line. So my issue is, even though those ones are rolling accounts, but this one again, I believe you have the expertise to clear it. Saying it was a system, you have journals. You can still use journals. All the auditors will need is the justification. If at all it's a system design, all the people who are responsible for the software. But we cannot sit and say it's in the system since 2021. We're in 2026 now. We're talking about 5 years. So for me, my start is the window of saying we have to sit and look at it have passed. It have taken you 5 years. Okay, and the worst thing is people outside might think these are actual cash movements, there are monetary implications. Very ineffective. There are inefficiencies in booking it. So it is in the interest of all of us for you to clear this. And for me, I'll be honest with you, maybe I use Sage, I use QuickBooks, and others. In accounting, we know that all transactions do not hit at the end of the year. But you have a window of opportunity to do all those necessary corrections where it comes to mispostings, okay, items that do not clear as at the end of the year, so that your accounts will reflect actually what happened. So, Chair, I think what we need to do here is not just to say that it is still pending, but let's give an ultimatum to the accountant. If need, we work with the auditors and the people who design the system. But this is not significant. You can definitely take care of this.
Chair, can I come in? In my submission, I want to start by saying you cannot correct all errors with journals. That's what I want to say. And that approach, if it could have worked, that is what we would have used to correct this error. Because that's the same approach we used to correct the 91. And the second point I want to bring up, you did say this is accounts for 2021, 5 years ago. What I want to say is we have worked within, I don't know, 1 year or 2 years. We were able to produce accounts for 4 years. So looking at the backlog, we cleared the backlog until we are able now to present this for consideration today. So it's not as if we're just sitting there for 5 years and not doing anything. And as I said, these accounts, once this one is done, we move to the next one. And you have a team that is looking on sorting out the issues. But where it has come to this point, it's because it needs more effort plus the support of the supplier to sort it. Because this is an accounting treatment, and you don't just go and deploy a solution that has not been thought through properly. You know, I have said here, this is the thinking that we are trying to adopt to say, since this is the problem, and it's not everywhere. Otherwise, you would have seen all the sub-treasury accounts behave like this. But it's just one transaction that we're talking about. So I am saying we want to look at the possibility of changing how we approach this. But even with that, you have to try and then test it before you can easily deploy it and say, yes, it's a workable solution. And it doesn't take 1 day or 2 days. That is what I want to say. We're committed in cleaning up. But obviously, I want this August gathering to understand that we're trying to clear a backlog. And in clearing that backlog, everybody must understand that we will have some of these issues, you know. But then we're committed to, once that gap is closed, to clean up. Thank you.
Just to add this, Akadanya, the Guardian appreciates your efforts. What we are trying to say is the error cannot be allowed to continue and persist. You see, the behavior of the accounts should have been thought of before the system design. And the rest can be learning by doing. So still we'll insist, because this one cannot continue, even though it is one. It cannot. The law is clear. The accounts need to be prepared 6 years after what? 6 months after the previous year. So we commend you for clearing a backlog, but it should not have existed in the first place. I think that is the starting point. Okay? And the system design will advise that before you design a system, think of the behavior of the accounts, so that you will have an opportunity to do corrections. The main reason we are concerned with this, in fact, is the betterment of your entity. Because today, outside, people who don't understand accounts and how they behave, when they see these huge figures, what do they think? They think of monetary losses, when it does not occur. But still, we are giving them the opportunity. So Chair will still insist. It's not about thinking. Let them find a modality. If it calls for bringing the individual who designed the system, let the person come. Let the person come. But in subsequent audits, these clerical errors will persist, to be honest. Thank you, Honorable Chair. That's all.
Yes.
Thank you very much. Honorable, I think the response that has been provided by the Accountant General, in addition to what you have said, I think that's where we want to make sure that at least we are current in terms of our accounts. Because you're talking about issues that have actually persisted for, or were actually initiated in 2021. Now we are looking at 2020, 2026 for 5 years. So the institution has been dogged with so many of these. And that's why we have worked tremendously hard for us to be able to clear all of those accounts for the period that we are looking at. Now, what we need to look at going forward is what the 2025 accounts will look like. I think because sometimes the problem we have with IFMIS, we are confronted with so many challenges with regards to the IFMIS. Some of these challenges that they are actually seeing are things after the fact. Because during implementation, how the system was initially designed, and so many alterations that we have done on the system to customize it to our own needs, have rendered some of the things that you're actually talking about, making it very difficult for us to be able to do that. And that's why it will take time for us to be able to resolve some of these issues. But here, I will implore the Assembly to maybe let's look at us clearing these accounts. For the 2025 accounts that will be presented, give us an opportunity for some of the challenges, if they still persist, in terms of how to reconcile them and rectify them going forward. Because to be honest with you, she has also been, because these accounts that we have actually resolved, some of them are not her doing or during her tenure. So she's been able to resolve things that existed prior to her coming on board. So we would implore the Assembly to give us opportunity for the 2025 accounts, and we will take it up from the 2025 account, because that will be the most recent accounts, and some of the challenges that we'll encounter will be able to resolve through that. Thank you, Chair.
Thank you very much. Then you want to comment?
Yes. What I wanted to say is in line with what Fofana just said about the behavior of accounts, which is crucial. In any account that you create in any system, it has a behavior or properties or some kind of character. And I think it's important that the AGD takes a look at those accounts, their character and their behavior. And because under normal circumstances, at the end of the year, when you are moving to closing the year, there are certain characters, if you have on a particular account, you cannot close unless you resolve those issues. And that's really very, very fundamental in most of these accounting systems you have. I'm talking about big accounting systems. So for me, I think it's important that they take a look at the behavior of this account. Not only this particular, but they can look at others to see that this issue doesn't actually reoccur. Because of here, we're talking about only the sub-treasury, but there are other accounts that could behave the same way. So to avoid getting into the same issue again, I think it's important that you interrogate those accounts, their behavior, and ensure that they can be corrected so that issues like this cannot occur. Because otherwise, we can resolve this sub-treasury, but then you take another account and you will come. So unless you look at the characteristics of the behavior and correct the behavior of that account through the system in some kind of way, then I think we can close this issue. But otherwise, we will continue coming the same thing. That's fine. All right.
Somebody Spanish right up in corner.
Good afternoon, Mr. Chairman. Can I just contribute slightly a bit? Mr. Bagariabo, I've been listening to the Accountant General and the auditors regarding about this particular matter. I just want to contribute slightly a bit. It appears as there is two things, which is cash accounting and accrual accounting here. So if the Accountant General has moved funds into a sub-treasury in 2021, and the cash actually didn't reflect in the sub-treasury until 2022, and government accounts prepared based on cash accounting system, in that case, it's going to be a challenge for them to recognize the revenue in 2021. It's about the timing of the economic event and the timing of the cash flow. These are the two parameters. Given the fact that they are preparing the account based on the cash accounting system, the movement of the cash flow will preside over the economic event in this case. In that case, I would suggest if they can actually look in 2022 accounts, whereby if the sub-treasury can recognize the 2 million as a revenue item in 2022, at the same time expenses in 2022 based on cash accounting. Thank you. That's my submission.
Thank you very much. I think we can conclude on this. As I have indicated, there's still not that the matter is however, the accountant indicated that they are committed to cleaning up and then looking at the possibility to do so. And then you can act on those possibilities, and then whatever action or the outcome can be confirmed in the subsequent audit, that is the 2025. Is that okay, honorable members? Can we proceed? The next issue has to do with misclassification of line items. The auditors noted that the exchange gain amounting to 68,930,296.8 was wrongly recorded as expenditure. Then they recommend that that management should reclassify their exchange gain, and the management responded to that. Page 27.
This will be remarked to another revenue. This will be remarked to another revenue as exchange gains.
Auditor's comment. The final remains outstanding up to the time of finalizing this management.
Management.
Yeah, Mr. Chair, this is an issue of misclassification. In the previous years, we've been having losses all along, exchange loss. So the line that is used to capture that transaction is an expenditure line. But for this particular year, we happen to have a gain. And we had this extensive discussion with auditors on how to, there were two options on the table, but we could not agree at the time of finalizing the audit, we could not agree on which of the two to take. That's one of the options is to create a revenue line, whereby we will do a journal between this line and to that line, or the other option is to leave it as an expenditure line and then map it on the other revenues. But unfortunately, by the time we finalized, we could not agree on any of those two. So it was left as an expenditure line on the it. But the impact, although it is a misclassification, but the impact of these particular transactions, even if we had moved it to revenue, which will be the proper classification, but the impact of it on the closing cash balance at the end of the year will be a net effect. It will not have any impact. So if you put it on revenue, it is going to increase your revenue. Understate your the revenue expenditure will remain the same. But if you leave it on your expenditure, also it's going to reduce the expenditure. So the overall impact on the closing cash balance is a net impact. But the classification is what we could not agree on at the time of finalizing the audit. We could not agree on the classification with the auditors at the time of finalizing the audit.
The two options that were advanced, we could not get any of them.
Yes, we could not, at the time of finalizing, we could not. But we all agree that it should be classified as a revenue instead of leaving it on the.
Yes, it should be classified.
Yes, but the classification is what is not done. So the issue is still.
Why is that not done?
That's what I was trying to explain. There was the two options, we could not agree on it by the time we were finalizing. So we could not agree on either of the two options.
Finalization, we are now before the committee.
Yes.
What is applicable, not before the
Auditors.
But the committee wants it to be done, and you agree that it should be done.
What is right and what should have been done is to reclassify it on other incomes. That is the right thing to do.
Can you do that?
For this particular year, I don't think it can.
We are looking at others that we are saying that it could be reflected in the subsequent.
Had it been it has an impact on the closing cash balance, then it could have been adjusted. But since the impact on the closing cash balance, which is going to roll over to the next year as the opening, is not having any impact on that. So reclassifying it at this particular point in time.
You have not listened.
No.
Honorable, if I get to the notes.
Honorable Chair, I'm only concerned with because if you look at the auditors, the adverse opinion is based on some of these errors which we have done. Rightly so, it doesn't have any impact on cash balance, but you realize that your revenues are overstated by 68 million. Sorry, your expenditures are overstated by 68 million. Your revenues are understated by over 130 million.
Same amount.
Yeah.
It's
the same amount.
Yes, the same
by 68 million.
Yes.
Yes,
Expenditure
it's
is
not around postage.
68 million.
So
So revenue is also understated by 60.
No, but the question is when you record it as an expenditure, what happened? There must be a corresponding entry.
Yes,
Where did the corresponding
because
entry?
the way the system is designed, all expenditures have a positive balance. They are positive figures. And the revenues, the receipts and the revenues, they have a negative balance. So this particular one
No,
is classified under expenditures, which are all positive, and this is the only one that is negative here. Therefore, it is understating your expenditure.
Chief, when you make the posting to the expenditure line, where did the corresponding entry go?
These are adjustments, like, for example, if you make a forex payment, and the payment is made at the bank. Okay, in the Gambia here, the forex is always moving against our analysis. So obviously, when you make a payment at the bank, that particular, what is paid at the bank will be more than what you record in your books. So you have to do that adjustment. So the adjustment will be between the expenditure line and this, the cash account, and this particular line. It's
So which means-
either
No, just allow me, which means you have an impact on your cash. Even though at the end of the year, the impact will not be seen, but at the time the boosting was done, the impact was there. What I want to say is that, let me ask a question. You used to have exchange losses, not forex losses, which means in your accounts you do not have forex gains
In the prior years.
in the prior years. Did you open the forex gains now? Because you said previously you used to have forex losses.
Yeah.
That's why in this particular year, when there was a forex gain, you just put it to the losses, then it becomes an expenditure. So I'm asking whether you open an account for the forex gains. No.
We're actually using one account, so it's where the weight, the falls, that would determine,
Okay, very-
the net impact. So we're using the same account for exchange gain and loss. So in this case, on a normal circumstance, it should have been debit as an expense if it is exchange loss. So now it is exchange gain. It is marked to note 18, it is an expenditure. So in actual fact, it had the same impact of reducing the expenditure, just as the same way it would have had an impact on it coming as a revenue. So that's why he's saying, in as much as the remapping was not done, but the impact remained the same because it netted off against the expenditure because it was marked to note 18, which is an expenditure category.
No, but that's where I don't understand. The forex gain itself is a revenue. Because this is the difference in the forex value, okay, at the time you were doing the transaction. Okay? So it's a revenue. So when you had classified it under the revenue value would have gone up. So, and when the auditors, when we are preparing your accounts, your concentration is not only on the cash balance. Not so. The revenue is very, very significant in it. So I think using the cash balance, saying it doesn't have any impact on the cash balance to kind of mitigate the impact it has, we're wrongly placed. You know, not to argue further on that, what I just want to say is, work with the editors. Do the entry. The impact is apparent. We all know it have overstated your expenditures, understated the revenue. Cash which doesn't have any bearing on it, let's not bring it into the picture. It's a non-cash movement. So let's just put it out there. Concentrate on where the error is. So why is it difficult to have an understanding with the auditors before they come?
I would still want to say, you know, when you have an expenditure and you have a gain, meaning that you have expense less. So for me, it is still in order to hold it against the expenditure. Like, because for instance, if you had like 50,000 as an expenditure, and the gain in actual fact is attributed to more to expenditure than revenue.
What about your disclosures now? PSL accounts is bigger than the balances. We want to know the disclosures. We want to know whether in this particular year the government have made a forex gain. So now, if you net it off in your accounts, what will it appear in your books? No way. That is in the back end. You see, it's in the back end. But the people receiving the financial statements, would they see forex gains anywhere?
It's disclosed. We have it in the face of it. We have it in the.
You have it in the face of the accounts.
It's part of.
So at this point, I think you go to the auditors because I don't understand anything. You let it off and still disclose it. I don't understand.
Chair, just one thing before. Yes, just one thing before they come. In fact, I think I'm also getting confused here. Now, if the permanent secretary were to ask you a question to give a report of all the exchange gains so far for let's say a particular year, how easy would you able to provide that? Because you have one account, the gain and loss, they go to the same account. So what
the balance of the account?
No, the balance is overall because they would never.
That's
because the gain is going there.
Whether you made a gain or you made a loss.
Yeah, I understand. I'm not saying overall. I'm talking about the transactions.
Yeah, you can pull the general ledger for that particular.
And then it's sorted. And then it's sorted.
All the entries will be there, the debits and the credits.
Yeah, but it's the way.
Honorable member,
Yes.
witness, I don't respond directly to the
Yes.
is in the very you allow him to address this point. To say anything, please address the care.
Yeah. So what I was asking, Chair, is the ease of which reports can be generated to show whether there's an exchange gain or exchange loss, and I think that's the issue we have here because all of them are going into the same account. Even though you can generate and then sort it out based on whether this debit or this credit, but I think to provide transparency, I think it's important that you have a special account for the gains as well. Even though 99% of the time you got a loss anyway, but it's important that you have that separate. So that if that was there before, I think it would have been very easy on this particular transaction because it will be mapped to the right account instead of just everything going to the same loss.
Chair, like we have put here, maybe I need to bring out the constraining factor, which has to do with the time allocated for this, because the auditors would need to finalize at a point. So some of these things that are still outstanding, you will see them feature here. Why? Because they had to close. Even if we have a solution for it, you would not see it here. So that is why we're having this discussion today to say, like if you ask, why do we have this? We'll tell you after the audit what we had done. And I think that is the discussion now. So, like was said before, we're going to map this to an expenditure, given that this is whatever. We're going to map it to a revenue code so that we are able to recognize the gains properly.
That's all. I think we can move.
Mr. Chair, I think let me also add that what I want also for us to take on board, especially from our team here, just to make sure that we take note of this, because most of the time we might have this being even repeated in 2022 or 2023. But the idea, what I'm looking at is these comments that have been made is for us to look and take this on board and rectify them so that at least when it comes to 2025 or 2026, before we close, all of these points that have been made, we just verify to make sure that these things that have been raised in previous years do not occur in the 2025 accounts that we actually submitted. If, for instance, we do not have two accounts that is taking care of exchange rate gains and exchange rate losses, let's make sure that it is actually prepared for and created within the system so that at least subsequently we are not going to have the same issue going forward. I think those are the things that we need to take on board. Take each of these things on board. When we go back, we see exactly how to make sure that we put in the system so that at least we'll make progress. Because we don't want to see these things coming back on an annual basis as well. Thank you.
Accountant General, can I take that we are working on the possibility to regularize? Can we leave that to be confirmed in the 2025 report?
Yes.
Yes, anything? So far, can we proceed on the members? Go to page 13. Issue the differences in amounts disclosed as retained earnings or deficits. It is noted that 2 million, it is 268, 2,687 was only used to balance the statement of the financial position. The details are indicated in the table. It's page 30. Page 30, are you there? And the recommendation was for the management to give explanation for the above discrepancies and adjust the financial statements accordingly. The management responded to that. Yes.
We say that there is no difference between the retained earnings and the extended trial balance.
Auditor's comment. We know the difference is amounting to 251,409,377 between the closing of 2020 and the opening balance in 2021 of the retained earnings. Details as follows.
During our interaction with the auditors, the auditor efforts have been done, but still the issue keep on reappearing, even though there know that some efforts been made. Accountant General.
This particular one, there was an issue with the native trial balance, the one that is in the system. The system was not moving the correct opening balances to the subsequent year. So that's what resulted into these differences. But this issue has been reported to the system suppliers and they have worked on it. So it's not occurring in the subsequent days.
Yeah, but report according to auditors in 2021, 22, 23, up to 24. Are you saying that beyond 2024 it should not occur?
No.
Beyond 2024?
Yeah.
Auditors, any further comment?
Well, this issue was reported in 2021. We can confirm that the issue arose in 2021. We have to confirm in the subsequent years as well. Not sure whether we have this. It was not reported.
But during our when we are reviewed, you indicated that it only appearing in subsequent years, 22, 23, and 2024. Whether 2025 it will not reappear.
It recalled in 2022, but 2023 and 2024, I don't think it was there. No, it didn't. 2021 and 2022, yes. Yes. It's not reported on the 2020, yes, 2023 and 2024.
Honorable members, the informing us that it will appear in 21 and 22, however, 2022 and 22 was not reported. But that is to say, as at 23 and 24, the matter has been resolved. Other questions?
Chair. Yes, we can assume that, but perhaps maybe the candidate has to confirm that they have resolved the issue. Because otherwise it can come back in 2025. But if they have done something that will resolve the issue, then we can move on because it didn't appear in 2024.
Accountant General, you've heard from the auditors?
Yes, Mr. Chair. Just like the auditors have said, the reason why it appears in 2021 and 2022 because those two accounts were prepared virtually almost the same time. So that's why the issue appeared in 2021 and 2022, but it has been reported to the system suppliers and they have worked on it and this issue is resolved.
Do you have to excuse us for going this business?
Hey, it seems that they are happy for us to go. Are you happy? Me, I'm not going.
Because no, you're saying you have any issues, you won't be able to communicate. So if you leave, you shouldn't go there. You shouldn't go.
No, wait. No. I'll stay. He will go there after we swap.
But I think, no, Chair, let them not all go there. One is staying. Okay, they can alternate coming in and yes. But the idea, Honorable, is to look at it and see exactly how we are going. That's the whole idea. No, that's what I'm saying. Some of the
committee. And if you validate it in our absence.
And I love us to be again. Yeah.
Has to go through. I can't do that.
Yes, fine. Okay, you go. Then after.
You still have a quorum?
Yeah.
What is your quorum?
3.
Like,
In fact, we only
that is not your business for them to
no, it's not planning. So
Let's continue. Chair, we can proceed.
We proceed, we have the Can we proceed to P32? Overdue or reconciled items. P32, overdue reconciled items. And on that, the auditors noted that the transaction from 2019 to 2022, the annual or reconciled items from bank reconciliation statement prepared by the Accountant General Department related to cash book and cash bank transaction from 2019 to 2022, and made recommendations. One, for the unreconciled items that may compromise the accuracy and competence of the financial statement. The presence of the long outstanding reconciliation issues suggests weakness in the internal controls, and therefore unreconciled items could conceal errors, irregularities, or even fraudulent priority. The recommendation was for the Accountant General, for the management, to ensure that all reconciled items from 2019 to 21 are promptly investigated, and then that Accountant General should improve its reconciliation process, and robust monitoring system should be implemented to regularly review the bank reconciliations. And that the management responded to those recommendations.
Reconciled items in appendix X have been analyzed, while some have been adjusted in the revised 2021-22, the remaining ones have already been adjusted in 2023.
Auditors comment. We have noted adjustments made by management. However, there still remains unreconciled items totaling $5,746,211,656.46, and 2,562,678,459 for payments. Details is shown in revised Appendix A.
The audit noted some efforts done, but still the issue is not completely resolved and they are appearing this time, 21, 22, 24. You stand by that?
Yes, sir.
Accountant General?
As indicated in our response, we have been working on this. We must acknowledge the fact that we had a backlog in terms of reconciliation from 2020 to 2023. But as we speak, 2024 and 2025, we have been able to get this trash out in the sense that we are not having issues with reconciliation, except maybe with transactions that maybe we're unable to capture because of maybe inadequacy of the budget and so on. But for the prior years, while some have been adjusted in 2023, work continues. I'm sure this would not be the quantum as we speak, because after the completion of the audit, we continue to look at this and others. We want to say this we attribute to various factors, i.e., there are instances where you have inadequacy in terms of the description, because the system is designed in such a way that once you have a TL transaction, by default, the bank transaction should have the same unique identifier. But where the bank leg is not having the unique identifier, then it becomes difficult to reconcile. So like I said, we have built a backlog and we continue to analyze and clear this. Like I said, I'm sure this will not be the quantum as we speak, because during the audit and even after the audit, we continuously work on this and clear it in subsequent years. But we are committed to having this trash out. But I think what I want to show this August gathering is that issue of reconciliation. We have put in mechanisms in place to ensure that we do not have reconciliation backlog. We are reconciling on a real-time basis, and we do not envisage or foresee this problem to persist in future. But we'll continue to work on clearing the transactions that are pending under this report.
Chairman. Yeah, you know, this is a big issue, and I just want to find out from the Accountant General's office, are you doing this manually? Because when you want to reconcile billions, I don't know if it is humanly possible for you to do that manually. Because if you look at 2024 accounts here, and I'll read it. During the audit, we noted on reconciled items relating to cash and bank amounted to 8.5 billion for receipts and 14.9 billion for payments in bank. So it seems, in fact, it's going up. So I think you need to do something. And I don't think manually you'll be able to do this. I don't think so. So I don't know what mechanism you're going to put in place. Otherwise, I don't foresee these numbers going down in 2025 or 2026. Because they keep accumulating. It's not like something is going off, but it's still accumulating. So from 2.something billion, now we are in around 8.5 billion and 14.9 billion on reconcile. I don't know, but something needs to be done. And I don't believe you'll be able to do this manually. I don't believe. Maybe they can help us. Maybe they have something in place that they can convince us that by end of this year, they will be able to reconcile this thing, because I don't think it's humanly possible. I don't know, maybe they can tell us what they have planned to do this year.
According to this should not be a point as of now. That is to say, 2025 and beyond.
Yeah, but that's why I want to know exactly what are they doing, because if you go to 2024, it's a big issue. What exactly are they doing now that would convince us that in 2026 this issue will not exist, or even if it does, maybe it's going to be on a very small scale.
Other General?
I know we have the issues that we're faced with are, many. Just to mention a few, what we are currently doing, which relates to unreconciled items as in relation to salaries. We're doing the reconciliation on a real-time basis where people are dedicated. Anytime salaries are paid, they are going to be, they're responsible for ensuring that they trace those transactions to the system as well as to CBD system. So on a real-time basis, we have somehow resolved the unreconciled items that relate to the salaries. However, we also have situations where from our bank statements, that's the core banking system from CBG, we have constraints in terms of the description, whereby you cannot trace it to transactions in our system. So making the reconciliation really very difficult. And, either we cannot do it automatic, neither can we do it manually. Because if you cannot trace a transaction from your GL to the core banking system, that is a big constraint. So those are some of the issues that we're grappling with. And in terms of what we are doing going forward, the first one I mentioned on the reconciliation of salaries. The second one is we're trying to, I'm sure you must have seen the advertisements on the papers where we want to have a reconciliation tool to help us in doing this reconciliation. So I am really very optimistic that with that we will be able to address some of these issues.
Mr. Chair, maybe here the issue of timing is what would be of interest, because as you already know, that cannot be done maybe for 2026, because they actually be putting for that reconciliation the software for that.
And they don't have budget for it. There's no budget line.
So that's.
Don't worry, we know where to get it.
So I think that is where we will definitely have to work on. And I think this is something that has been plaguing us for a while, in the sense that even as we speak currently, sometimes you receive payments from the central bank, you cannot tell exactly what the payment is for, but there is no description. So you as an individual, if you're having that problem, let alone the system as a whole, given the fact that Accounting General is processing millions of transactions on an annual basis. So I think these are some of the challenges that AGD is currently encountering. So it will take time, maybe not for 2025, hopefully 2027, once we have a system in place, then that reconciliation exercise can be done.
Yes, Chair. If I may note, when Clara was intervening, she did indicate that this will not be a point as at now. So that is to say, the situation might be regularized. I stand to be corrected. Clara?
Did you throw it?
I think I will still want to stand with my submission to say we've been able to address this. We have other underlying internal issues. But from our end, for the normal transaction, yes, we have been able to have a good grip of the reconciliation issues. But he also tried to challenge me to say it has increased in the subsequent year. And to say, to some extent, we also have instances where we have direct debits into the account, and maybe due to budget constraint, we were unable to raise it, and all this would be attributed to the reconciled item. But in actual fact, from the transaction that we process, we have not had much issues with reconciliation for 2025 and 2024. That much I can say because that is handled under my unit. But the reason why we have more, of course, there were some adjustments that we had done against the suspense accounts, and that also had an impact on that. We've commenced the reversal of such transactions as we clear, and I believe that that is also further reduce the quantum. But I still want to say that we've actually improved in terms of the reconciled items, but
We have improved, but not completely regularized the situation. Even the improvement, by mentioned and noted by the auditors that some efforts done that issues is completely resolved and keep on appearing. But now what we want to learn is when you mentioned earlier on that it should not be defined as and how. I want to be very clear whether that means that the issue has been regularized.
Chair, I think we need concerted effort in this because, like she said, I would not rule it out to say that all the reconciliation issues are resolved for 2025 going up. You know why? Because until we have a system that can take care of the current challenge that we're having, maybe it would still remain to be a problem. In addition to that, you know, we have this connection with CBG, where also the system needs to be improved so that it can capture the details, you know, so that they can be matched to our transactions and easily the auto reconciliation can work. But in addition to that, also, we have some, like she said, the direct debits that are done at the level of the bank, some payments done at the level of the bank, for which we do not have budgets, or budgets, they are not recorded in the system. So like I said, I started off by saying it needs concerted efforts so that we clear this issue of unreconciled items.
Yes, Chair.
Concerning efforts from who?
All stakeholders.
The stakeholders.
All stakeholders, yeah.
Including the labor.
Yes. Yes.
Yeah, Central Bank. Central Bank. Central Bank and PS.
Let me say it.
Chair, what I wanted to say is two things. I think the academy should work very closely with the Central Bank in terms of the narration. Because even us, we receive sometimes some narration from Central Bank when they make some kind of payment. You look at it, you have no idea. But you know me, when money comes, I like it, no problem. I don't mind narration. Yeah, I don't mind narration. But the issue is, if you do reconciliation, narration becomes very important. So and that's the reason why I think Central Bank should have been here today. I don't know if they're here yet.
No, they've been informed.
Yeah, but they should have been here. Because their narration, generally, their narration is really very bad. So I think they need to work together. Because if Central Bank can be able to put proper narration on it, they'll be able to do some reconciliation on the others because you can always match. Secondly, also about the timestamp. I don't know, because sometimes you have a cut-off time during the day when they cannot post a transaction. So I think those also must be the same. Otherwise, you may send a transaction on a particular day and time. When it's not recognized on the other side, they will do it the following day or even 2 days after. So they need to look at those things too, because the timestamp is also very important in reconciliation. So I don't know, but I think those stakeholders, you and the Central Bank, you need to sit together and work on an agreed type of narration, because there must not be any narration. Because narration must reflect exactly what they're trying to post. Otherwise, it will be very, very difficult to reconcile. Even if the amount is the same, or you may mispost in $1 or $1, whatever it is, but it will be difficult to reconcile. So I think you need to work together to ensure that we have proper narration, but also have the same kind of cut of time so that time stamp will match. Because otherwise, you finish here, but this one will be done following day, or it will be very difficult. These only two stakeholders, you and them, not AG and us. Yeah. All right. All right.
Yes, thank you very much. Yes. And, in your submission, you mentioned that we need a system, collaborative effort to address this issue. So I just want to know which kind of system do you need actually to be able to address such issues? Because there are so many stakeholders involved as you said. So do you need a special system that will coordinate the whole system in terms of trying to get all this in right?
Okay, I want to first respond to Honorable Low's submission in terms of working with Central Bank to agree on the details so that, we improve on the description. That has already been done, These TMS, that's the Treasury Management System, have been implemented for some years now, and it has been working perfectly. And on that, we had agreed on unique identifiers that can be used, that must be present in our system as well as the CBG system to facilitate the auto reconciliation. Because remember, we have not automated to come back and then be introducing manual processes. And given the amount of transactions that are passed on a daily basis, it is impossible for manual processes or for people to manually do it. So, but then the reason we're having these challenges is because those unique identifiers are not coming, on our bank statement to facilitate that auto reconciliation. Now, coming to the issue of the timestamp, the timestamp doesn't really matter. If we process a payment and for one reason Central Bank is not able to pay it on that day, because it happens where our foreign payments, because we have not implemented the EFT for foreign payments, those ones, there is a time lag between when we process it and when they will eventually pay it, and this is what also brings about the exchange differences, and because of that, payments will be handled, processed at AGD, but we will wait for Central Bank. So whenever Central Bank does it, whether it is after a year or so, but if the unique identifiers are there, it doesn't really matter. Because then you will match those transactions based on what you have and easily it goes. But that is the difficulty or the constraint that we're having. And we continue to work with CBD so that, we have this. Because it has been going on, in fact, on a daily basis, But there are certain things that are not within your control. Instead, it is on the control of the other party to whatever, but as it affects your operation, you can only shout, and continue to engage. So that is what we are doing at the moment. So I don't know if I have answered your question.
To answer it, unfortunately, Central Bank is not here.
Yeah.
Then we would have engaged them so that at least we can have a unified system, as you said, because it's more of coordination from one point to another.
Yeah.
So, yeah.
And I remember now your question, whether this system that we're trying to bring in, is it going to help in the coordination plan or whatever? I'm saying no. We are supposed to be doing, because this is the human intervention that needs to come into play so that everything works, But this system is just going to help based on advanced technology to help us to perform our reconciliation, and guide us on the right track in terms of how do we do it differently to achieve our main objective. That's the idea. But then the coordination, that's the human element, whereby we will need to work with all the stakeholders. And remember, this is not only for mainstream MDAs, but it also includes the autonomous agencies, including National Assembly and National Audit, the judiciary as well. You know. Because remember, these are consolidated accounts, and some of those transactions, you do a mess here, it will fall here.
Can we proceed?
Yes, Chair, but we need to agree on something because they realize there's an issue, and central bank and others need to play a part in that. So we need to have a definitive plan on what exactly are they going to do. Now, if it's going to be through the PS, if central bank were here, it would have been much easier because they can understand the constraint. Because otherwise, if this unique identifier, they mentioned earlier that they've already agreed on those things, is not being done, this thing will continue. So we have to find a way to get central bank on board to ensure they understand the magnitude of not following those agreements they have with them. Otherwise, they're going to continue to have these unreconciled items. You know, and again, you are talking about thousands of transactions on a daily basis. So at the end of the month, I will not be surprised if they have like, let's say, 1 million transactions. It's very possible in the system, and if that happens, it's humanly impossible to do it manually. So I don't know.
Central Bank, hopefully tomorrow, they will come and we can draw the attention to this. And that we still maintain, even though enforcement was still, there are pending balances to exist, and the matter, the results. Can we go to 334? The difference in balances used to perform bank reconciliations. The auditors noted that the year-end bank reconciliations for various accounts revealed discrepancies between the bank and cash balances used for reconciliation and actual year cash bank balances. And on that, advanced the following recommendations: that the identified errors are promptly investigated and corrected, and that the management should ensure the internal control surrounding the bank reconciliations process, and finally ensure that all reconciliations are reviewed and signed off by most senior officers to prevent errors and omissions, and that the auditors or the management also responded.
The Syrian embassy is no longer there is no difference between the actual cash book balance and the balance of the draft reconciliation. That is for the Gambia embassy Syrian. Moffat draft reconciliation is not bringing any amount because the account is no longer in use. The TMA and the project difference will be investigated.
Auditors comment. Following the management response, the following bank accounts still remains outstanding. Details are shown in revised appendix B.
Our further update on this matter is that for the TMA, that 10,000 is a legacy issue between us and the bank because it has to do with the transaction, the level of the bank that is causing the difference. So we had engaged the bank before, but we would have to re-engage them on this matter because the difference is as a result of a difference in the bank statement at the level of the central bank. For the other two matters, the deposit and for the TMA cash book, we have carried out the analysis and the solution is currently being deployed. Whilst the project has been sorted out, the TMA and the cash book, the team is working with Softec to deploy the solution. But what we had done internally is to carry out an analysis of what is causing the entire difference, and we've been able to establish what caused the difference. It actually had to do with a technical issue. The solution is currently being deployed. So we look forward to having this, the deployment completed before we call it the 2025. That's the update on this matter.
Are you trying to advance that the issue can be regularized and can be confirmed in 2025?
Yes, for all the project and the deposit, like I said, we've carried out the analysis of what actually is causing the difference. And we're working with the supplier to deploy the solution. It was a technical matter that caused the difference.
And it can be addressed.
Yes, in fact, some of the balances have been regularized, but we still have the TMA and the other account. I think that's the deposit. So,
Completely 2025, there will be no issue.
yes, we should be able to resolve this.
Honorable members,
Okay.
2025, they should be able to resolve corridors. You can confirm that in 2025.
Okay, Honorable, please confirm that during the audit.
We consider the next issue, difference between Cargo and Mode 15. The differences for the TMA amounted to 10,504,614, and for the SP DDP is 967,858. The auditors recommended that management should investigate the discrepancies between the actual cargo balances and the balances disclosed in Note 15, and management responded. Management,
Yeah, the difference between the cash book and Note 15 has been worked on, even though not completely resolved.
Auditor's comment? We know the differences between the actual cash book and Note 15 for both PMA and the special deposit cash accounts. Detail is shown below.
This was also a technical issue, and we worked on this. So the TMA, after the analysis was carried out, the matter has, or the amount has been reduced to 120. Even though the deposit almost remained the same, but we've been able to work on the TMA from 10 million to 120. So we will continue to work with our supplier on this balance, because the difference, it rolls over.
and that is as from 2021, this has to be 2021. Has there been any improvement? I know there was improvement from the amount from 10 million reduced to 120. But beyond 2021, has there been further improvement?
I don't think so, because it's like all these accounts were almost simultaneously audited.
Okay.
So I'm not sure whether much progress had been made after the 120, but we would have to take note of this to see whether a difference still exists in 2025 or in the subsequent year.
So that is to say, in actual fact, it can be confirmed in 2025.
Yes, we will check we'll take note and we will check whether the difference still exists for these reports.
Auditors?
We'll confirm in 2025 account, during the audit, 2025 account.
Honorable members? So we can proceed to the next issue. We can be on the 38. That has to do with the failure to provide bank reconciliations. This affected missions in Sierra Leone, United, Sierra Leone, and then the banks are United Bank for Africa, UBA, and UBSI, and then the mission also in Washington. And therefore, the auditors recommended that management should ensure that bank reconciliations are prepared on a regular basis. Management
the reconciliation statement for Sierra Leone are available for your review, and Washington DC will be contacted to provide the reconciliation statements.
Auditor's comment. The reconciliation statement for Washington DC revenue account have not been provided for our review up to the time of finalizing this management letter. We have received and reviewed reconciliation statement for Sierra Leone operational accounts. However, the reconciliation statement for some of the months were not provided for our review. Details is shown below.
that is to say, for Sierra Leone that was provided partially resolved, but still some remain unresolved.
That is correct.
For Sierra Leone.
Yes.
And then Washington was not provided.
Exactly.
Since after the audit exercise, National Accountant General, what efforts have you made?
I want to submit that the unit responsible for this, for embassies, updated me that this was provided to the auditor subsequently. However, we will work with them to, if it is available, to provide it to them.
I want to see your body language.
Yes, I was I said the update I got yesterday was that it was provided to the auditor, subsequently the Washington. But however, I will work with the auditors to make sure that this is made available if it is not available, made available.
So you saying that your update you received yesterday?
Yes.
From Washington?
No. Yeah, from the unit responsible for embassies. Yes.
That
It was provided to the auditors.
Which one was provided?
The Washington.
Washington.
Yes.
That was during the time of the audit?
No.
After
During the time of the audit,
Yes.
they said they have provided both Sierra Leone and Washington. However, when we were going through this, preparing for today, I reached out to check, and they told me Washington was also provided later. But I am not sure who in the audit team was working with them, but we'll work with them to give it to them.
I want to, Washington, was it provided later or during the time of the audit?
I want to believe, because I did not go through to that level, I want to believe maybe by the time they were concluding the audit, maybe it was not provided. But as at yesterday, they said it was provided to the auditors, which I believe maybe subsequently or even during the audit. But like I said, we will work with the auditors. If indeed it's available, we will provide it to them.
Audit?
This was only provided when we are doing the audit for 2024, not 2021 to 2023.
That's for Washington.
Yes, that's correct.
By 2024.
Yes, Honorable, yes.
Now, so that means the audit on that can only be confirmed in 2020.
Now, what we can confirm, these reconciliations were provided when we are doing the audit for 2024, not 2021 and 2022. Okay.
You say, sorry. But since when you were doing the audit for 2024, then this was provided, and that means it will not, the report as is for 2021, that is still standing.
Exactly,
Now,
that's correct.
to confirm whether the matter has been resolved or not, can only be reflected, is it 2024 or 2025?
If they provide us with those documents now,
Yes.
yes, we can reflect that we have confirmed them. But as at the time of the audit, these were still outstanding, up to the time of finalizing.
At 2024?
2021, I mean, as at the time of this report, they were outstanding.
When they were outstanding 2021, and when you were auditing 2024, did you say that they were provided in 2024? And if so, what is the status? Whether 2024 audit, the issue has been addressed, or is still pending, or can we allow the audit in 2024? We can confirm that.
Yeah.
Okay.
Yes, this is a monthly, I would call it routine, that they need to do on a monthly basis to reconcile those accounts. Now, what we need to confirm from the Accountant General is, why is it that some of them are not doing this reconciliation, or is it not supposed to be part of their job in the embassies? If it's part of their job to do reconciliation on a monthly basis and submit to you or whoever, to the unit, whoever it is, why is it that these people are not doing that? And I think that's a question we need to have an answer to. Because they are required, normally, they are required to do reconciliation on a monthly basis and then file or submit to somebody, they file. So that when the auditors come, you submit, say, okay, this is the one for Madrid Embassy, for example, these are the reconciliation for this particular month. You have it filed. But if they are not doing it, we need to find out exactly why are these people not doing these reconciliations. That is Washington and Sierra Leone, where it seems they are not consistent. Because when you look at here, it's saying January to April not provided, August to September not provided, and November to December not provided, and then you see this for this particular account. So why is it that these accountants in those embassies are not doing this? So I think that's what we need to understand.
Yes, Honorable, it is Washington that is outstanding. Sierra Leone has been taken care of.
Yes.
And like I said earlier on, I was informed that this was provided to the auditors. However, if the auditors are still saying that it is not provided, we'll go back and then extract it. So these reconciliation statements are done on a monthly basis. I am not aware of any embassy that is not doing the monthly statement as we speak.
Yes. Then the question would be, why is it difficult to make the submission to the auditors if it is done? And why is it difficult to submit it, to give them to the auditors to review? What's the issue? Is there improper filing or what's the problem? Because I can only be two things: it's not done or it's not filed properly. Those are the only two things that can happen.
Any answer?
Yeah, I just want to mention that this is 2021 that we're dealing with. So, like I said, I was made to understand that it was provided, which means they will have to go back to the records and dig and bring them out if indeed they are there.
I've made consultation with my team, and was made to understand that these documents for Washington and Sierra Leone are outstanding for 2021. However, in our sample for 2024, Washington also falls under that category, and the Washington documentations were provided. But as of 2021, this information was still outstanding. That's our position.
By 2021, the documents
For Washington was outstanding and part of Sierra Leone.
Outstanding.
Yes.
For 2024,
2024 was a different sample, and Washington falls within that category again. And then some of those documents were provided. I don't know whether you understood what I'm trying to explain.
for 2024,
Yes,
documents Washington was provided.
was provided. But 2021, it was outstanding.
So when it was provided, did you act on in 2024?
2024, yes, we did.
What issues we can know that
We did 2024, exactly.
So to see when we get to 2024, we'll confirm the status of Washington.
2024, not 2021.
When we get to 2024,
Yes.
confirm the status. Can we consider the next page 40, difference between cash book and general ledger. The auditors noted that discrepancies totaling 4,221,524.71 between the general ledgers and the cash books, and on that recommended that the accountant general should investigate these discrepancies, and the management responded.
The response is that the difference between the GL and the cash book are more
Can you please put on mobile on silence?
Auditors coming. We have confirmed the adjustment made by management. However, we noted difference amounting to $332,036 between the cash balances of the various accounts and the different general ledger balances. Detail is shown in the table below.
That even though some adjustment made was still that remain outstanding difference of 336.10. Kandangela,
Yes, further work was carried out on this, but we still had some of the embassy accounts, aside the TMA, which the difference is attributable to a technical issue. The others had to do with the embassies, you have the difference because some of the accounts were not translated. These were not translated because for some of them, the amounts were a bit significant. So it actually required more time for one to look at the disparity, whether it's reasonable, because this difference should have gone to the exchange rate difference. But usually one would have to look at a reasonable exchange rate difference. So given that the audit was very compressed, usually the team would have to work with the embassy accountants in a bid to establish whether it is actually an exchange rate difference or where there are errors that they will have to correct. So as a result, all these embassy bank accounts, we could not carry out the translation because we did not conclude on looking at the disparity between the two, because for some of them it was a bit significant. So I think it was as a result of that we still could have this difference because of these were not translated. The cash book balances and the GL were not tying up because the translation was not carried out. Because they're all foreign bank accounts. So, but we look forward to ensuring that, the team will work with the treasury or the embassy accountants in good time, because this can actually be avoided. We can ensure that the two tie up, because foreign accounts require that we translate them at the end of the year. So
we're talking about 2024, and then you see 21, 22, 23, up to 24, the books were simultaneously audited. We don't know whether improvement has been made in those years. However, beyond 2024, 2025, are we anticipating the issue to be reflected in the books?
As we speak, the team are working on the translation, and we hope to have these two figures tie up before we do the draft.
We don't want when the committee release the report and then that is the time you're supposed to be acting to regularize. It's an issue. That's why we invited all stakeholders. Whatever is an issue that is unresolved, and from now onwards, you should be acting to address them before the committee will table the report to the plenary. We don't have to wait until when the report is up. And that's the time that we'll start working on it. It's an issue, it's not resolved, so it has to be resolved before the report is released. If there is any adjustment or effort made, you can provide that to us. Then we are going to enhance our report, subject to confirmation of the national audit. Then we will know it's no longer an issue. Okay? So the team is set, let the team continue to work. Now onwards, hopefully, if not this coming session, to lay the report, maybe the June session, the report will be laid.
But can I?
And I'm not only addressing Accountant General on this matter. This is a general appeal I am making. Maybe any institution, any area you are affected, you can take note that if the matter is confirmed, we have to be unresolved. We should endeavor to resolve it before the report is finished. Yes, Accountant General.
I wanted to make clarification on this matter. You know, for embassy bank account, let me just say this, like we have had instances where we have this resolution that indicates that it should be resolved. So matters, they should be like forward-looking, because if you look at it from an accounting point of view, you look at the cash book at the general ledger, what would cause the difference is because of exchange rate difference. If it is not handled during the year under review, which is 2021, and the audit is completed, it can be only handled in subsequent years, meaning that this translation can only be made good in 2025 because the accounts for the subsequent years up to 2024 have been concluded. So like sometimes we have this constraint where you would have in your resolution to say this difference must be adjusted. So, but now it will be a matter of where it should be adjusted. This we will not be able to adjust up to 2025. Of course, that will mean that the cash will be overstated or vice versa, depending on which one was more. But we would ensure the adjustment is done in 2025, but not in this, under the respective years, because the audits are concluded. It's only the cash book that will be adjusted, which is an asset that rolls over.
I think that's what we have been emphasizing. If what can be resolved and you put to us a particular time that we are foreseeing it to be resolved, that is put to us and that will be captured in the report. If it's 2025, to be confirmed in the subsequent report and the 2025. So what I'm saying, before then, you can be making your effort so that we know very well that in the 2025, you'll be anticipating that the matter will be resolved. And that has to be preceded by the effort that the institution is making towards that. That's the emphasis. Members, any issue? Can we proceed? to the next issue, and that is to the 42. Difference between note 15 and the general ledger. And the discrepancy is amounting to 18,128,730.85 between note 15 and the cash equivalent and the general ledgers of the various cash amounts. And therefore, the audit recommended that the Accountant General investigate the discrepancies and take corrective actions to adjust the balances accordingly. And the manager responded.
The difference between cash book and note 15 for all the cash accounts has been worked on. Now this issue has been worked on.
Auditor's comment. We have reviewed the adjustments made by management. However, we still noted differences amounting to $638,865 between the general ledgers of the various cash accounts, and the amount is closed under note 15 cash and cash equivalents. Detail is shown below.
Even though significant improvement from 18 million to 638,000, but there still exists that difference. And since then, what effort made?
We would look at these differences in the 2025 as part of the collation of the 2024 financial statements.
You look at the difference in 2025.
Yes. For this residual account, or the difference that still exists.
And looking at it, does that mean that you anticipate to resolve the matter 2025?
To the extent possible, we will endeavor, even though it's not all accounts are not under our control. We have one for, but we will work with them. One is on the human rights, the other one is on the judiciary. But we would engage them so that we have.
They are not here, that's why they should be here.
The other one is deposit judiciary, the other one is human rights. So we will engage them so that they will also work on their matters because we're consolidating them. But we would definitely work on this.
If they are here, it's not only easy to engage them, but they should also engage you and resolve the matter. Right? Honorable members, any issue on that? We go to page 43, fail to provide bank confirmation. And that is to say, the audit noted a bank confirmation from GT Bank and Eco Bank, Ajib Trust Bank was unsuccessful, and that the information remains unpresented up to the time of finalizing the report. And therefore, they recommended that management conduct a comprehensive review of all government accounts held in commercial banks, confirming ownership and control to ensure that all accounts are accurately reported and disclosed in financial statements. And therefore, the management also responded.
Our response was that this is noted, and we have obtained bank confirmation for disclosure in the revised.
Auditor's comment. The bank confirmation have not been provided for review up to the time of finalizing this management letter. Therefore, the issue remains unresolved.
I would have to check from within because we indicated that we had obtained this. So I don't know whether maybe there was a miscommunication from our team. I don't know why we did not provide this to them.
Mr. Chair, maybe a point of clarification, because the bank confirmation is supposed to be provided by the bank to the auditors. It's not supposed to come from us. So they have contacted the commercial banks to provide the confirmations, but they were not responding to them. So what we did was we wrote to the commercial banks to provide the confirmation to the auditors, but I don't know how comes the bank did not provide those confirmations.
Chair? Yes, in fact, that was going to be a question, like how is this request made? Normally, the auditor is supposed to write to the bank directly. And if that's the case and the bank did not respond, I think we need to take a step in that one. So I don't think the account general would have to do anything with that. But if the auditors write to any commercial bank requesting for government bank statements of any sort, I think they should respond appropriately. When they fail to respond, I think the committee needs to take a step to ensure that stops immediately. Yeah.
So that is to say, according to the accountant general, the banks reported that they have provided, and for the auditors, still maintain that they are not in receipt of your statement. Auditors, I'm saying that the accountant general indicated that they were informed by the bank that they have provided.
Well, as far as we are concerned, we are not provided with the yeah.
So, do we have to wait until when we get a report, or when we do our report to make a recommendation, or we have to contact?
Yes, we can. Yes, we can put that as part of our recommendations.
Yeah.
But I think we should also ask the officer of the clerk to write to those banks concerned. In fact, I will write to all the banks to inform them that whenever the Auditor General request for statement related to government bank accounts, they should provide that within the time frame they provided. Yeah. So unless if they want to.
Chair?
Yes.
Just a point of clarity, yes. Normally when we write to most of these banks, they do respond. In this particular instance, the bank accounts that we have mentioned here, those banks didn't respond to our confirmation. That's why we indicated it. Yeah. But on an annual basis, once we write, they do respond. Yes.
The reference should be made on this matter specifically. Can we proceed?
Yes.
Pay for building council tax amounted to 490,710. They are indicated in the payment. And the auditor recommended that the AG should provide a detailed explanation, and also immediately steps should be taken to strengthen internal controls. The management responded to that.
Management response. These were erroneously cancelled at the payment level, but with valid payment vouchers and have been reinstated in the revised financial statements.
Auditor's comment. We have reviewed the information provided and noted the following payments have not been reinstated. Therefore, the issue remains unresolved. Detail is shown below.
Yes, reinstated, but still the outstanding difference is 132.
We can confirm that the amounts have been reinstated. So it is for the auditors to go through the system. We will provide the new document numbers that are attached to these transactions for your confirmation.
Chair, maybe we need to understand the process of check cancellation at the level of the accountant general. Now, who is responsible in canceling checks? Or what happens when checks are printed? What is the process that you guys go through to ensure that those check numbers actually are input in the system to minimize fraud or duplication, or what exactly do you guys do when checks are printed?
Okay. When payments are processed and there are issues, be it that the checks have to be cancelled or the payment itself is having an issue, we have different units at the Accountant General's Department. The unit responsible for payment is the Treasury unit. Since they are responsible for payment, they won't be able to cancel any checks or any document as such. So now it is weighed to the accounting unit headed by Clara, who would be the responsible for the cancellation, segregation of duties. So now, for some instances, this was as of 2021 when the EFT was being implemented. You are bound to face some challenges, and these are not checks, they are document numbers. Like we print, by this time we have stopped paying, issuing checks. So now, for one reason or another, you will be faced with the payment has not landed and so forth. But in actual terms, in the background, it has affected. So by the time you cancel the check, then you notice it on your bank statement and so forth. Then unfortunately, the voiding has already been affected and so forth. We would ensure that, yes, the payment is effective once and that's it. Now that's why we reinstated the payment with different document number, because of this document number has already been used. The check number has already been used. We cannot use it again in the system.
So are you saying that this is a system issue? Because if someone is going to cancel those numbers, it must be done for a reason. I guess it must be done for a reason. Now, if you were to reverse that to ensure that there's a new number issue, will you allow the payment to go through now? Is there any process? Because I think somebody has to look at that.
Yes, so for the document for this check to be cancelled, it is well documented, and you have the reason for why is it cancelled, and it is submitted to the accounting unit. It's not verbal, it is a process, a written process. And now, once you are reinstating the payment is not to go to the bank. So it is to reinstate in order to regularize. That's it. But no payment would go to the bank.
Thank you, Chair. Maybe we just have to confirm if the issue actually has occurred in subsequent years. If it has not, then maybe we can move. Do we have the issues again recurring in 2022, 3, 4?
Yes, indeed, Honorable. This will occur in 2022 as well.
But 23, 24?
No, I think it's only.
It seems to be a bit wrong. Chair, I think we can move.
It didn't appear in 2023 and 2024.
It did appear.
We have 24.
Then we see the matters in the 2020 and 2024. There is issue into 6. Failure to submit quarterly account statement failure to submit quarterly account statement and year-end cash book. On that, the auditor recommended that the accountant general should enforce the requirement of self-accounting projects and follow procedures to be established to ensure compliance with this requirement. And the manager responded
Noted, we will endeavor to ensure that SAP submit their quarterly reports. Auditor's comment, management response is noted. However, this issue remains unresolved. A follow-up will be made on subsequent audit. Anyway, this has been a challenge at the ministry's level, but efforts are always been employed.
Chairman, today I have less work to do. So based on your responsibility, I am giving you to speak for yourself. That's why you have me flanked by everybody. So he is the DPS responsible for fiscal on the Ministry of Finance, because the Ministry of Finance has a aid coordination unit, and these self-accounting projects, they are within the mandate. So he is responding from that point of view.
I think you can inform me, please. Director will respond. So I know who will be responding.
Yeah, sorry about that.
Anyway, Chairman, AG puts me on the spot. but I'll attempt to provide to shed light on the issue. As the management response is noted, we will endeavor to ensure that they submit their self-accounting projects, submit their quarterly reports. To be frank, this has been an issue. And this was 2021. So I am not sure whether the subsequent audit it has been resolved, but I know we have been having challenges with some of these projects to be for their quarterly submissions. So I'm not sure whether in the subsequent audit the auditors still have issues with this or it has been resolved.
Yeah, the response for 2021 the issue remains unresolved. However, beyond 2021, auditors submitted was true.
Yeah, this was not reported in 2022. However, we'll confirm in 2025 whether this has been fully resolved.
When you say no report in 2022, it's 2021, 20 and 24. Can you say audit?
These audits were done concurrently, so we are not doing prior year issues.
So to be confirmed in
2025, exactly.
But it was not an issue 2022.
Yes, yes, Honorable.
Can we proceed? Difference in cash balance. The difference is 30,860,485 $5, and the auditor recommended that management investigate and reconcile the difference. And the process for preparing and reconciling the financial statement should be reviewed and improved. Management.
This will be adjusted in the revised financial statement.
Auditor's comment. We noted a difference of $2,440,977,330 is between the cash at the year-end balance and the cash reported on the financial position.
Even though significant adjustment from 30.8 million to 2.4, but still balance, the balance is still outstanding. What effort has been made after the audit exercise?
Mr. Chair, there's been this one of the legacy issues that we have been facing, but there is progress in addressing them. So year on year, we are, working hard to ensure that these differences no longer exist. But as we speak, there is still this difference.
Audit.
Chair.
Has it been an issue in 2022?
Yes, as he confirmed, this is an issue of ongoing relevance, meaning that it has recurred throughout this period from 2021 right to 2024. Yes, it has not been resolved.
Chair,
Yes.
if you look at the findings, it's about 30 trillion, 860 million, 485 million. Is those 3 zeros part of it, or is an error? It's part of it. No, this 30 trillion.
Yes, yes.
No.
No.
The initial,
This was 30.
it was 30, but this one is it's a report issue. Is the report is that what is speaking the wrong figure.
Okay.
Even as we speak, we have already reported this issue to the system developers. Yes. Even as we speak right now, if you pull this report raw from the system, it gives you very, very funny figures. So you have to work on it yourself and adjust it accordingly.
Yeah.
So, but this was during the draft. That's when the auditor speak, but in the revise it was addressed.
So this is an issue also.
Yeah.
So even now we know software. So tell me. Ajak.
In 2025, we confirm.
We'll confirm in 2025.
No, they still fix. We confirm. They fix, then we confirm 2025. Yes. Yes. You fix. You
He fixed and we confirm.
Yes.
Yeah. Can they equally explain how they are going to fix it?
Counter General. He wants you to explain how you're going to fix it.
Okay, this difference arises as a result of, under the Ipsos cash basis, we are using the Ipsos cash basis of accounting. So on your statement of receipt and payment, at the end of the year, your cash balance at the end of the year should be equal to your cash and cash equivalent. That is the cash balances of your various accounts. So, but most of the differences, if you look at it, are coming from the semi-autonomous institution and semi-autonomous institution like National Assembly itself is affected, Judiciary, National Audit Office, they are all affected. If you look at the cash balances that we have, so some of these institutions, they are not posting transactions in their cash book. They're just sending checks at the banks to be paid, but they are not recording them in their cash book. So that is the result. That is resulting to an inflated cash book balance. If you look at their cash book balance, you will be thinking that they are having a lot of money, while in real sense, if you look at their bank account, they only have, if I want to take Judiciary as an example, currently, Judiciary is, at the time of preparing 2024 accounts, they were having up to 717 million in their cash book. But if you look at their bank account, it's only 25,000. So that huge discrepancy is one of the reasons why we are having this huge discrepancy in our account. So we have to work with them to ensure that this difference is eliminated.
Okay.
Okay, it seems like there is a sort of negligence from the Bishop. As per the Public Finance Act, the board controller should be reporting to your office monthly and quarterly. So why is this not happening?
Are you referring to me or to the Auditor General?
Not the accountant. Sorry, accountant general. I've seen in the Public Finance Act regarding to reconciliation of accounts. That should be happening monthly, quarterly, and so and you should take the leading role as the accountant general. Why is that not happening?
Not for the autonomous agencies.
already. And then why don't you take the blame now? As per his explanation, he said that this issue is mainly caused by this autonomous institution.
There is no provision in the regulatory framework, i.e. the PFA, the Public Finance Act, that mandates semi-autonomous agencies or autonomous agencies to be reporting their reconciliation to the Accountant General. However, given that the Accountant General is responsible for the systems, we support entities to clear their accounts, do their accounting, and where they have issues, they reach out to us, we support them. However, those entities are mandated or they have full-fledged accounting units or accounts unit to carry out that function, because the Accountant General will not carry it out for anybody.
Chair?
Since those autonomous institutions, they are dealing with public funds, these are public funds. At least there must be a connect between those autonomous institutions and the Ministry of Finance. And there you are, the connection.
Like I said, we work with almost everybody, provide support. In fact, for the judiciary, there was a time that we positioned staff to support them in this. But it cannot be on forever, you know. At a point, we had to withdraw our staff, but then it looked like as soon as, you know, you complete this one, since it looks like they continue to do the same thing. So at a point, we are also constrained because we have our own issues as well. So that is the situation we find ourselves.
See what I'm seeing. The clerk of the National Assembly is the vote controller here. Likewise, the permanent secretaries are the vote controllers. But there is a connect of reporting which they failed to do.
Yeah.
And you are now hold accountable for that. So which means maybe there must be some act of negligence or whatever I may call it.
Yeah, I know that provision where you have that oversight to supervise, as far as financial management is concerned, all vote controllers, you know, and that on a daily basis or periodically is done, where we find out that there is some kind of I will not call it negligence, there is some kind of gaps in performing the functions, in which case, like I highlighted earlier, that we had gone to a point where we allocate, you know, staff to support the processes. And these are processes, because you cannot prepare financial statements if some of these things, you know, the daily transactions are not carried out and they're reflected on a system. You would have a bank statement, obviously. But if you are not following the procedure for your accounts to be updated, you can do the payment, satisfy your beneficiaries or your payees, but then in terms of accounting, you're falling short of that requirement because, you know, you have not completed the day-to-day processes, you know.
Yes, Chair. Yes, I think this actually aligns to our recommendation a few years back on the reporting line of the Accountant General. We strongly believe the reporting line is not correct, because you cannot have a Receiver General, Accountant General to report to a vote controller. For me, I personally think it's wrong. And this thing needs to be corrected in the law. This is one of the recommendations we did at the previous, in the 5th legislature with the Fpac, where we said, we agreed as a committee that the way the reporting line is done at the level of the Accountant General needs to be looked at and needs to change. Because again, you cannot have the Receiver General, Paymaster General, and the Supervisor of Accounting Officers when you yourself are reporting to an accounting officer. That's very abnormal. And I think this needs to be corrected. And I think we need to capture that in our recommendation that we are the lawmakers anyway. We can change. But I think we need to work together with the executive to ensure that it's done. Because you see, the issue now is, let's say if the PS of Finance fails to do this and sees reporting to the PS of Finance, how would she hold that person accountable responsible? It's almost impossible. So the issue of the Accountant General Department itself in general, I strongly believe we need to take a look at it in deep to understand that they have to be separated so that they have the right powers to be able to hold others accountable. Because you cannot hold somebody accountable when you are accountable to that person. That would cause some problem. So I think that should be one of our recommendations, even though we did make the recommendation. And at the time, even though the Accountant General at the time refused to say anything when we made the recommendation, but it's normal. But I think we need to have that in our recommendations to ensure that law needs to change so that the proper reporting lines actually are drawn so that you can also make others accountable for their actions or inactions. She will not say anything. I agree. Yeah.
I'm a related party. I'm a related party.
Yeah. You agree with yes. When she's an interested party. She's an interested party. Just like the previous one. They won't say anything. But when you go outside, they say, one I take up. We'll note it. No problem.
We'll stop there. This thing needs to be addressed.
It needs to.
You know, in fact, in the Gambia, we don't even know, our revenue potential. It affects our budget. I have raised it during the budget debate. Even departmental self-raised revenues, these are not reported. These extra budgetary funds, these are not reported. It seems like everything is just loose. People just do things as to how they want to do it. But you don't adhere with the instruments that are supposed to guide. Because I've heard so many arguments advanced here. So there is two things. We either amend our Public Finance Act to suit our realities, or failure to do so, this will just be confusing members of the National Assembly or oversight bodies. That's my opinion. Thank you.
I think, Chair, we need to bring agencies as well to hear as part of this discussion, because I remember engaging some weeks ago, engaging the Judicial Secretary when we were looking at or preparing for this discussion engagement. And I told him that he needs to look into this with his staff. Otherwise, we will be forced to take measures, drastic measures. Yes, I know they have been working, but it's not good enough. But it is important that they know this. They have their responsibilities. We also have our responsibilities. But I am not sure in the communication that was sent by the National Assembly whether they were part of the addressees. I was trying to look at it, but I'm not sure if Judiciary, National Human Rights, Ombudsman, IECs, were part of this.
Okay, I think according to the Fpac, those agencies were not part of the list of witnesses are supposed to attend this process. However, we take note of your
Yeah, that is what I thought, that they were not in scope. But as part of the government consolidated accounts, especially all those that are using the IFMIS, they will be consolidated. And some of these things that we are dealing with would affect them.
Honorable members, we get into 1:45 and break. So at least convenience time, we take break for prayers and then we'll spend. Time is 3:45, 1:45 by 2:45. We can resume, or 3 o'clock. 1 hour will be 2:45. That's fine. So can we adjourn the,
Chair,
yes?
where is it in the standing orders that those people should not come appear as witnesses?
We didn't say that they should not come.
Here as
We
witnesses.
limited the
Even his office.
invitation to Accountant General and the line ministries. Therefore, what she is suggesting, the agencies also should be come in. That's what we are saying. We take note of our recommendations. They are not invited.
Because they are conflicted.
Okay, so can we adjourn the suspend the system until 3:45? Sorry, 2:45. Okay, then let's make it 3 because we are not sure whether the lunch is ready. 3 years. So 3 o'clock we can resume and continue the meeting. Thank you. It's supposed to be here. We are closing by 4. Well, I think that will be informed by the progress that we are making. If you are able to do well and finish this, then because we have only 3 days for the consideration and 4 books. If we can finish this today by 4, yeah, but we want to endeavor to finish this today.
This
2021, yes. That's what I'm saying. We want to endeavor to finish it today.
Because the way we are moving.
Yeah, but we are progressing now. Yes, we want to finish this today, 2021.
It's likely that we go beyond.
Likely.
Yeah, likely.
Likely. Are you affected by the AC? I can see that. So, can we have break and resume by 3 p.m.? Thank you.